Keynesian economics is used to encourage the demand of the people by selling what the people want. So what really happens is people sell Lucky Charms because the people want the Lucky Charms. But the opposite is supply side or free market, which is a way for people to sell what they have but not necessarily what the people want. This influences our economy because it shows how independent our society and how flexible the economy can change. This results in fiscal policy. Fiscal policy is when the government intervenes on the economy by adding taxes or other variants to keep the economy flowing at the pace they want it. This can be done through inflation, taxing, or dipping into the Federal Reserve. The Federal Reserve is used in case of a recession like the Great Depression or the 2008 recession. The stimulus produced in the Great Depression helped our country bounce back up and become prosperous and well, other than the $16 trillion in debt. This relates to the American dream because it shows how our wants create a larger picture to help others receive their wants and to have others receive their wants in the economy. There are three ways that the governments tax the people: regressive, progressive, and proportional. Regressive taxing involves a single flat rate that affects the lower income taxpayers the most, because the value of the dollars spent have a higher impact on the lower class than of the higher class. For example, if there's a $1 tax on a candy bar, the value of the dollar can vary depending on their income. If one person has an income of $10, the dollar represents $10 of their total income. However, if another person has an income of $20, then the dollar value is 5% of their income. A progressive tax involves a higher tax on the people with a higher income. An example of this is when someone has a yearly income between $9,000 and around $40,000. Then there is an income tax of 15%, while a yearly income of $400,000 or more will have an income tax of around 40%, according to the 2015 tax brackets. Finally, proportional tax gives everyone the same percentage of tax. However, the value of that percentage varies based on the value of the item that is being taxed. An example of proportional tax is the self-collected sales tax in Colorado, which is 3.86%. according to the Colorado sales tax change. The percentage can have different values due to different classes. If one person has to pay the 4% of $100,000, then they would have to pay around $4,000, while a person who pays 4% of $1,000 would only have to pay $38 to $40-ish. These types of taxation can also affect businesses as well. When a company's gain is taxed, the percentage of the company's profit is limited. For example, if a company has their total profits taxed by 30% and they only make $1,000 a month, then each month the company would give the government $300 in taxes and only have a profit of $700. Therefore, the three different types of government taxing can affect individuals and businesses immensely. This can also affect the ability for our generation to achieve the American dream. The current generation's American dream is to go to college, get a high-paying job, and to be successful. However, achieving this dream is very difficult due to the rapid increase in prices and taxes. This can only be achieved through exceedingly hard work and dedication.
Monetary policy is used to control how much the interest rate is used to impact the society and add more value to the Federal Reserve. Companies use liquidity or creating available assets to the market or company. One can increase liquidity by increasing the production with increasing wages and or prices. Companies mostly increase the amount of products that they make rather than increasing the wages and prices. Inflation overly affects the companies by pushing them past their long-term capacity. While the central bank can affect the rate of demand, it cannot control the supply, making them only in charge of the flow of dollars without creating actual value on said dollars. Individuals buy things that they desire. They buy things out of their own self-interest, regardless of how the product will affect the environment or how expensive the resources costed to make the product. People are constantly buying and the market becomes stimulated. At some point, there can be too much spending, which leads into inflation in the market. However, when this happens, the government has policies that steer the market out of sticky situations like this. For example, in the fish game, each player went for the red and blue fish because they were worth the most amount of money and became a scarcer resource. This caused an increase of the price of fish because it became rare and even rare as it was gone. Policies affected the amount of fish that each player could grab. If each player could grab more than one fish, the scores would have changed significantly. Another example of scarcity is with food. If there is one tomato with 5 people, there is a problem. It is a resource that everyone wants, but there is not enough for everybody. This relates to the American dream because it shows how some people are unable to reach their dream of how scarce the resources that they want are, but with the right approach, the American dream is easily obtainable.